Okay, guys, so it's Vanessa Terry here with Notary to Notary, and I am here with Mr. Derek Hall, and we are going to start the tax and financial management class for notary signing agents. So this is basically going to walk you through everything that you need to know when it comes to setting up your business, you know, what you need to keep track of financially, how to file your taxes, things like that. So I'm actually learning too. So I have my pen and paper because I need to know everything, you know, as much as I can. You know, tax law changes all the time. So I want to make sure that I'm up to date with everything as well. So we'll be learning this together. Ready? Awesome. So take it from here.
I started with H&R Block and fell in love with trying to create and build relationships and provide people with tax help, tax planning, and what have you. And it's just grown every year, and I'm excited to be here.
Yay! I'm so excited because I know like a lot of the students ask all the time, like, how do you do your taxes? How do you file this? And I tell them when I started, I just did a sole proprietor. I didn't even file an LLC.
Right.
And then maybe like 3 years later, no, when I had a sole proprietor, I just filed a Schedule C. And I deducted as many things I could possibly think of that I could take off so I didn't have to pay taxes or as little as possible.
Exactly.
I mean, anything I could think of, I would put it on there. And then, don't tell the IRS. I'm just kidding. And then I filed the LLC and I filed underneath that. But I found out recently that when I first started 3 years ago, I was still doing it wrong. So Mr. Hall is going to teach us how to do it right.
That's right.
So let's start from the beginning. So as a notary, you are self-employed. You're your own entity. So when you start working with signing companies and title companies, things like that, they're not going to bring you on as an employee. They're going to 1099 you. So you get a 1099 at the end of the year. Let's go over first the differences of a sole proprietor. So is it sole proprietor or sole proprietorship?
Well, the act itself is a proprietorship, but you are the proprietor.
Okay, because I kept mixing it. I was like, I don't know, I use both.
Absolutely, absolutely. Most people should start out a hobby. If it's a hobby or something you're not sure if it's going to be something you're going to do long term. Start it out as a sole proprietorship, or just go straight into having an LLC, creating an LLC. So proprietorships usually are your social security number using. You can get a fictitious name. In the city of Richmond, you just have to go to the court building and solidify that name. Make sure it's not being used in the city or county or whatever jurisdiction that you're in. The good thing about a sole proprietorship is it's directly connected to you. If you're looking to get something that's tangible to you from a building credit relationship or something starting out and you want to show that you, the individual, have purpose financially or starting out with something. If you're not employed, that's a good thing to do when you're first starting out.
Okay.
Once the business begins becoming profitable or you see it becoming profitable, an LLC kind of by definition is a limited liability corporation. So what it does is you're limited on what your liability is or what your risk assessment is. So that's the next step and something that everybody, if you're a subcontractor or independent contractor, should do. Register as an LLC. You get your tax ID number, register with the state. And that process, everything can be done from that period in one day. Once you get your EIN number off the IRS's website and then register with the State Corporation Commission, the very last thing to do is to get your business license. And if you're in the city of Richmond, whatever your jurisdiction, whether city, county, or what have you, the business license, which looks like it's over there, but in the city of Richmond, it's at City Hall. You just get the license and pay their fee. And from that point, now you're at least solidified and can open up a bank account.
Okay. Business checking, right?
Right.
Okay.
And without going too fast ahead, that's the thing that's going to allow you in the very beginning to start creating your own checks and balances, to keep your own books, which is the bank account.
Okay.
That's very important.
Gotcha. Are you guys listening? Cool. I know we just discussed the differences between the two, but do you feel like notaries starting off, they should LLC immediately, or should they just keep it sole proprietor?
Great question. Now, with a notary business, there's always going to be a need for that. So as long as you want to be affiliated with it, as long as you have the desire, and the backup, that's the very first thing anybody wanting to be in business should ask themselves. How serious am I?
Yeah.
Do I want this? And if I'm going to invest the time and the money and the sweat equity into it, an LLC is the best thing to do.
Okay. Okay. And then, so we decided that if you're gonna really devote your time to it, you should go ahead and just do the LLC, which every state is different as far as the processing. But so for Virginia, do you want to go over really quick the process for?
Absolutely.
Yay!
All right.
And keep in mind, every state is different as far as the LLC process. Pretty similar, but the fees vary and what you have to file varies. But if you can see this screen, we're going to go over. And don't worry, we're going to send this to you in the training later, too. So you'll have that information more up close.
Absolutely. Now, this website is scc.virginia.gov. This is the State Corporation Commission for Virginia. And like you said, every state is different, but every state has a regulatory body for corporations to set themselves up. This is the first step in creating the LLC. Okay. They have the drop-down boxes, and you go as a new business because you're creating it.
So let me say the link again. So it's scc.virginia.gov. If you're in Virginia, Ashley's going to put the link in the comments.
And then once you're on the website, you want to create a new business. Now, this is probably, they've updated this website about a year ago because it used to be very simplistic, but now there's a lot of different useful links that help you get to where you got to go. And just like with anything online, first thing you would do is create a profile. I had this automatically set in, so it would already be here.
For us?
Yes.
Oh my gosh, he's awesome.
So once you sign in, this is the dashboard.
Okay.
And then your online services. Right here's the drop-down box. You're a new business. Once you create the new business, it goes right here. Now, this is the first thing with an LLC. There's a lot of different types of business structures.
Yeah.
LLC is here, limited liability company. You can have a partnership, which is another type of business structure. There's the requirement is there has to be at least 2 people involved. It still has the structure of an LLC, but it's a partnership.
Okay.
So the biggest difference from there, starting there, a partnership, say there are 2 notaries that want to form a conglomerate, or they were a LLC and want to build their base bigger or join together. This is where they would do that.
So can 2 LLCs come together?
Yes.
Under a limited partnership?
Right. There'll be a partnership.
So like 2 notaries that have their own business and they want to do it together, they can just join together.
Absolutely.
Cool.
It's like 2 lawyers that become partners or merge together.
That's why you see like the 3 names.
Right.
I didn't know that.
Yep.
Okay.
Yep. And then there's a stock corporation, which is called a C corporation or incorporated.
That's a C corp. Okay.
And the LLC, the differences between the 3. There's a really good link on the IRS's website that breaks down what type of business, which one you should choose based on what you are looking to do.
We'll give you guys the link to that too.
Absolutely. But once you decide what your business's entity is going to be, and then you just go continue, and then it's going to ask every limited liability or every entity has what's called articles. And an article is simply what this company is doing, is existing, being created on whatever day, and what their purpose is, what type of business they're doing, whether it's whatever type of structure it's going to have, or what the design of the business is, whether it's restaurant, accounting, whatever the spectrum is.
Okay.
And I love the new design because it just next, then next, as opposed to it kind of does it helps you a lot along the way.
Yeah.
And then here it just describes what the articles are. So the proposed business entity name must be distinguishable upon the records of the commission from the names of all active business entities. And that kind of what that means is for the state of Virginia, whatever you say the name is going to be, if whatever you type, If it's distinguishable, then that means no one else in Virginia has that name. So that
Okay.
allows you to go forward. But if we were to say a company that exists, if it exists already, it says it's not distinguishable, and it'll let you know that there is a company that already has that name.
Okay.
So it'll allow you to, you have to just choose your name, and if it's, even if it's your name,
Yeah.
LLC or whatever, then from there, the last thing you get your confirmation and then your wonderful seal.
Cool. And then the fee
And
for that.
and that is $100 with the State Corporation Commission. And day one, that's the only fee you pay. That's the only service that requires a payment.
So $100 for the LLC for Virginia.
That's right.
And it's really quick and easy. And once you do it on the website, you can download your, what is it called?
I'll show it to you for one of.
Okay. So it's like really instant. Like you can do this in like, how long it took you? Like 5 minutes?
Right.
5 minutes you can have an LLC. Okay. It's really quick and easy.
And then you'll get one of these.
See, and that's what you want to hold on to and make copies of it, guys. Because when you open a business checking account or anything, they want that copy.
Absolutely.
So definitely make copies of it and save it. Email it to yourself, a bunch of different emails.
Yep. And create another note. Once you begin this process, you're your own business. So you should have at least a folder on a computer. Like you said, print out and have a folder. Have access to what you need, even on, now the smartphones. Have a picture of everything. So if you ever need it, it's right there.
I don't do the pictures. That's a good idea. Make a mental note of that. And then if you're going to keep it as a sole proprietorship, do you file anything?
No. The sole proprietor, it's attached to your social. When you file your tax return, you will still be filing a Schedule C, but there won't be a tax ID number to enter because it'll be your social. And if you did get an assumed name registered with that city or that jurisdiction, then you put that name on that Schedule C.
Okay. So if you don't want an LLC quite yet, which you should, but if you don't, you wouldn't file anything to just keep it as a sole proprietorship. You just operate.
Right.
And then when you file your taxes, you'll file the Schedule C. And that's what I said I was doing it the first 3 years when I got started. I didn't know, and I just was doing sole proprietorship. But I did it, and it worked for 3 years. So you can definitely do that if you want to do that, in the beginning until you're ready to LLC it. Cool, cool.
All right. And we were just talking about the Schedule C, so I wanted to just show what that form looks like. All right, and this is just the Schedule C. So if it was a sole proprietorship, the person's name will go here, and then their social here. If it's an LLC, that business's name, and then that tax ID will go there. Will go here actually, but the social will go here.
Okay, and I'm going to send them copies of that.
Okay.
Of Schedule C's.
Excellent. And so when you were describing when you first started, you had your income here, and then this section, the Part 2 expenses, there were a lot of things in here.
Everything. I mean, I wrote off like car, gas. They asked so many different things. I used TurboTax, and they just asked you a bunch of different questions, and I filled out everything possible. Like everything you could possibly try to deduct.
And where that's not a bad thing. The thing in being in business, it's a wonderful thing to receive revenue. And then the question you have to ask yourself is, as you're going on, if the company is profitable, profit means taxes. And a lot of people, when it comes time to tax time, the number one thing they want to just create as many expenses as possible to make that number, what's called the net income, low, so they can minimize what their taxes are.
Yeah.
Now, where that's not such a bad thing to do, the downside is this is a representation of how well you're doing. This is your first financial statement. So if your number is really low, that appears that you don't have a lot left over to buy anything. Your purchase power is limited. You don't look financially attractive to get some things like cars, apartments, houses, things like that. So while it's good to have the expense section, and there are a lot of them, like you said, it's you have to ask yourself, how is my business looking? You know, if I'm spending more than what I'm bringing in, or I have a little left over, then it's time to evaluate, or like you give yourself a personal budget, you should look at giving yourself a budget from the business.
Can I ask you this?
Absolutely.
Do you have businesses that don't claim all their deductions and expenses? Like they don't claim it all?
I'll give you an example. Yes, I do. An example of that would be if a business is in process of buying equipment or buying something to expand their business, they need to look financially able to pay back a loan. They have to look, their risk assessment has to be really, really low, meaning their net income has to be higher so they can afford to pay a loan.
Okay.
So what they may do is not account for a lot of the expenses, or, and I hate to use this word, but where revenue comes in, they may want to be very, very transparent on how much revenue they're bringing in. Because in some businesses, there are things, cash receipts are some of the gray areas. So, and as an accountant, you know, it's my responsibility to be, you know, my fiduciary responsibility is to be professionally skeptic. So I can ask the question, but as a business owner coming to me, they let me know what their revenue is, and they break down what their expenses are. And whatever that bottom line number looks like, their net income, that's the first line again to show how attractive they are financially.
Okay. Yeah, because we do get cash as notaries too. You do a lot. That's your general notary work. They usually pay you in cash, and so that's what you mean by that. Okay.
And a good base for that, that's where your bank account will come in also. After you get the thing, your certificates and your EIN number and get your bank account, that cash that you get, that would be your basis where you want your bank account to show. As you put money in the bank, that represents your revenue. As you're taking money out, those are your expenses. And that helps you in the beginning stages before needing someone like me to do your accounting.
Yes. Okay, so we have a question.
Okay.
I know I said it's going to wait to the end, but it's applicable. So if you file an LLC, will it go state to state? So she lives in Virginia, but home is Alabama. So if I wanted to work in both states, do I only need one LLC, or do you have to file in both states?
Unfortunately, because every state has their own registration, you would need to have both register at Virginia and in Alabama. Only one tax ID number though, because that's federal. That's the tax ID number on the IRS's website. There's just one.
So just one EIN, but you'll need two LLCs if you're going to operate in two different states.
Right.
Okay. But you can file a Schedule C. Can you file a Schedule C with an EIN?
Yes.
Yes. And a DBA?
Yes.
Yes. Explain this. Okay. I don't know that one. I don't know the question. I don't understand the question. Diana, you can ask it again. I just don't see where you're going with that. I have an explain the assumed name process. Is that like the fictitious name?
Yes.
Okay. I was trying to break up these words. So, how do they get a fictitious name? Did we go over that?
A fictitious name on the, if you're already an LLC and you want to get an assumed name, you would, in that registration process, it asks that question. If you want to have an assumed name, to give you an idea, if I am opening up a convenience store and the convenience store is has a model of 7-Eleven or like Southern States or something else, but I wanted to show this name, like when people create an LLC and it's almost like you're buying into another company.
Yeah.
Like McDonald's. I'll use McDonald's for example. If I'm buying a franchise and I'm creating an LLC for that location, I could be McDonald's doing business as Hall and Associates.
Gotcha.
And then I would want to do that because the name McDonald's has weight, but this particular location has an assumed name of doing business as.
So wouldn't it apply like if you're doing a sole proprietor and your name is Vanessa Terry, but I want my business name to be like The Right Notary.
Right.
I would DBA The Right Notary. Okay.
Absolutely.
Gotcha. Okay, then we had another question.
Okay.
I have an EIN and a business name under a sole proprietorship. Can I change the name? And if so, okay, so how can you, well, we're going to go over EINs in a second. But as far as, I guess, the sole proprietor, you're not filing anything, so you don't need to change the name.
The sole proprietor would go here. Your name would go here as a sole proprietor. If they have a tax ID number, it would go still on the Schedule C for filing a tax return. Mm-hmm. If they want to convert the sole proprietor to an LLC, there is no conversion. They would have to just create
the LLC. And then to change the LLC, there is a form, right, on the state website. If you want to change the name of your LLC, you can always do that. There's a fee with it.
Absolutely.
I don't remember what it is. Do you know what it is off the top of your head?
It's $40, I do believe.
There you go. But every state's different, so make sure you check with your state to see what the fee is. If you want to change the name, you can. It's just this form you have to file and a fee you have to pay to change the name. For EIN, well, we'll go over EINs in a second, and I'll make sure I ask that as far as changing names with that. Change names. Okay, so we covered LLC. If you have any more questions about setting up an LLC versus sole proprietor and the difference between the two, put it on the chat on the line, and then we'll cover that. So the next question, of course, we're going to get to is what I'm really super interested in is the S Corp.
Okay.
So, and I see it on here, like it says sole proprietor, LLC, S Corps. And you know when you have that W-9 and ask you which one you are, and side note, when you have a nonprofit, are you an S Corp or a C Corp?
To be a nonprofit, you have to initially register as a C corporation.
Oh, okay, so C Corp. So S Corps are completely different. They're two separate things. Okay, go. Sorry.
An S corporation is a tax preparation structure. And I say that it is for tax filing purposes. You can be an LLC or a corporation, and you're requesting to file your return as an S Corp. And what that is a small corporation wanting to be...
Oh, is that what it stands for? Small Corp? Huh, look at that.
Here it is right here, a small business corporation. Yes.
Oh, because everyone talks about filing the S Corp. So just so I can backtrack, you form the LLC, but you're going to tell the IRS that you want that LLC to be filed, like you file your taxes as an S Corp.
Right. And what it says, here's a page, a link to on the IRS's website. And I'm big on giving places where someone can go.
Yeah, that's good. And we're going to put these links for you guys too, so you have them.
So an S corporation are corporations that elect to pass corporate income, losses, deductions, and credits through to their shareholders for federal tax purposes. Now, in layman terms, what that says is, as an LLC, I want my business to file its own return, to have its own structure for tax purposes. It doesn't change what the business is as an LLC. But when that business files its return, however many people are involved in that LLC, if it's a single member, there's one K1, and the K1 is the representation of whatever the business income or loss is going to be for that business.
Okay.
That is then given to the individual who's the owner to file on their personal return. You see, so it separates the personal return from the business.
Drawing a blank, guys. Hold on. All right. So the business is going to file its own return, and then the K1 is given to the owner. So it's not like a W-2.
No.
Oh, okay.
And now
that's where I
see,
was getting confused.
Here's an example. Like on your the way you were filing previously, you have your 1040, which is your normal form, and then your Schedule C, which is attached to your 1040 to your personal return. Whatever that profit is for the business, Generally, you have to pay taxes because that's self-employment tax and regular income tax.
So you're taxed twice.
Right.
Self-employment
They're two different
and
types
income
of tax.
tax.
Absolutely.
Two different kinds of taxes.
Now, if you file and if you register as an S corporation, a small business corporation, the business files its own tax return. So that Schedule C is gone from your personal tax.
Uh-huh.
So when that Schedule C is gone, that self-employment tax is gone.
Yay!
So the S corporation, you're filing that it's called an 1120S, and you're filing that tax return. That K1, which is the proceeds that goes to the owner for either the profit or the loss, that K1 then goes to you, the individual, to add to your 1040.
So,
to your
okay,
personal
add
return.
that to my, okay.
Right.
And the business is going to file the 1120?
Yes, the 1120S.
So if you LLC but don't S corp, what do you file?
The 1040 and Schedule C, like you would.
Oh, you do it normally, but you're still taxed twice.
Right.
So self-employment and
Self-employment tax and income tax.
So when you file with the K1 and then the 1120S, what are you taxed on?
Income tax.
This whole time. I'm sorry.
Now the good thing, and there are pros and cons with both of them. And once you give them the site, it'll give the pros and cons of each filing status, and it really depends on what your where you want the company to go. Now, whenever someone's and lately you probably heard a lot about S corporations, because the moment you think of paying yourself as an employee, you can't do that as a LLC when it's tied to your personal return.
Okay.
And the reason being because if you're the LLC, you have your income that's on your Schedule C, then you have payroll which you're paying yourself. So on your personal return, you got a W-2 as your income from the business, but that expense is also going to be on the Schedule C.
Yeah.
So it's everywhere.
Yeah.
And that is why you can't pay yourself on as an LLC when you're filing the Schedule C.
Gotcha.
But as an S corp, when you transfer or transform that company into the election to file as a small business corp, now you can pay yourself because it's being treated for tax purposes like a separate entity.
Okay. We got that, guys, or we got questions on the S corp? I think I get it. So first you file your LLC. We're going to go over EINs in a second. And then you file for S. So how do you file for the S corp?
Once you've registered with the state, once you registered with the SEC, then you go to the IRS's website to get your EIN.
Well, let's go over that first.
Okay.
Since that might be a little, we kind of skipped ahead, huh?
Excellent.
All right, so you're gonna go over how to get your EIN, which is an employer identification number that's issued from the IRS, and it's completely free because there are websites out there that will charge you to help you get an EIN, and it is completely free. And it takes 5 minutes, and as soon as you do it, you can download it to your computer or you can have it mailed to you. So please do not pay to get an EIN number. Please, please, please don't do that, okay? So take it away.
All right. Now this page, I love this page on the IRS's website. It says you're starting a business. So we've covered a few things already. The first thing is this business, is it a business or a hobby? And there's a link for that just describes what the two are and how you look at it. You know, from the beginning, a hobby would be, I want to play games and I want to earn some money doing it, or, there's a lot of different hobbies.
Like painting.
Yes. And then you can transform that hobby into a business. We talked about selecting a business structure, and these are the different options. Now, the next thing is the EIN number. Now, this website is good. It asks you if you need an EIN, how do I apply? It's right here. You apply for the EIN. If you had questions, determine your eligibility. The eligibility is you have to have a social security number, be a resident of the United States, or a government entity. When you apply online,
And they changed their hours, right? Like you can
Yeah,
only do it during certain hours
absolutely,
now.
absolutely.
Look
You
at
go,
them
you
being
go
smart. 'Cause I used to do. I've done a few. I've done
all
a few
times of the
businesses.
night.
I've done a few businesses over the course of my life, and I just go in there like I have a good idea. Let's
I'm gonna do
LLC
it.
it. Let's
That's
EIN
right.
it. I trust
That's
me.
right.
I've done a lot.
Yeah, the hours now are 7 to 10, Monday through Friday. No weekend, no
No
weekend setups.
weekends. Monday through Friday, 7 a.m. to 10 p.m. IRS.gov. But I'll give you the direct link for the actual EIN page too. But
Absolutely. Absolutely. And once you go to the page, when you begin the application, there are some good bullet points, but there are things that should be commonplace things like you should be running a business in the United States. You need a social security number, things like that. You have to be a resident to be able to apply for EIN. Then you begin the application, and the first thing it asks, what type of business are you trying to create? And here you see S Corp is not here because it's not a true, S Corporation is not a true designation or type of business. It's a tax filing
okay.
Request. You have your sole proprietorship. You have your partnership, which we talked about a little bit, where there's more than one person or joint ventures. And this is the corporation, a C Corp or incorporated. Under here it says includes S corporations, personal service corporations, real estate investment trusts, regulated investment conduits, and settlement funds. This is also where nonprofits would file as well. And then there's limited liability or LLC. Either one of these two would be the beginning stages to create that S corporation.
But if you, oh wait, you're doing EIN. You're right. Continue. I confused
So
myself.
if we say, and now this is new too down here, where it says view additional types, including tax exempt and government organizations.
Yeah, that wasn't there before. They're
Right.
upgrading.
They're trying.
They're doing something out here.
And then once, and in this part here, once you select LLC, it gives some bullets on what the structure, make sure you're registered already with that state statute. And then when you continue, it automatically asks how many members and then what state the business is located in, because that's the federal government's checks and balances. They want to make sure that you are registered for that particular state.
And the members is just how many owners.
Right.
Okay.
Exactly. And now that next page, this is where we start talking about the S Corp. So once you start the process of being an LLC, this form, the form IRS Form 2553, is the election by a small business corporation to elect a S corporation status. What this is that form that you're going to fill out.
2553. Form 2553.
And that's this form. What this is at the very top, it's an election by a small business corporation. What this allows the LLC to be treated like its own entity for tax purposes. It doesn't change your LLC designation.
Okay.
It just allows you to file as a separate entity.
Okay. So then we fill in like name, address, EIN number, which we'll get in a second once we finish the process. But then it asks selected tax year. So now this is my question. I always put my tax year from January to December.
Right.
Is that fine? Or
That's
should we,
fine.
Okay, so why do they give you all these other options?
Sometimes, depending on the business structure, fiscal years are important. Let me think of a type of business that I work with. Investment groups. If you have a business where your income is higher in one particular section of the year, you may want your fiscal year to end, say, in February. If you, from a budget standpoint, usually nonprofits do that a lot. When they have a budget to adhere to, if their fiscal year ends in March, where they have the least amount of expenses, and they want the end of the year to look favorable for them to reapply for new budget, for new funding.
Okay.
Things like that are why you would want to particularly use fiscal year. Generally, calendar year just works a lot better.
Okay.
January to December. And I think I have another link which gives, let me see, that's a great question too.
So then other question, oh, you want to answer your question? Not yet. Well, I think I can answer this question. You just tell me if I'm wrong. So the question said, how many EINs should you have? And I think the correct answer is you just need one for one business.
For one business, absolutely.
Yeah. So you just need one EIN for that one business. Oh, here's a good question. If I create an LLC for my notary business and I have another business as a sole proprietorship, do I file 2 different income tax returns separately?
No, it'll be one tax return, but it sounds like there'll be 2 Schedule Cs.
Okay.
So you can have multiple. If you can have as many small businesses that are either sole proprietorship, LLC, if they're tied to your personal return, there'll be one 1040, but there could be numerous Schedule Cs.
So you can have as many businesses on one return for yourself.
Right.
And then please explain the differences in deductions for you. So we're going to go over deductions in a second.
Okay.
But I'm ready.
All right. So we were back at the EIN. And there's going to be a part where it's going to make us just stop because we're not putting in any information.
Okay. And the EIN application is really fast, guys. When I tell you it's like 5 minutes, really it's 5 minutes. And I will do like a sample one on the course when I upload it so you can see how quickly the LLC and the EIN is really fast.
So you say LLC. And it's going to be, this one's going to be a 1 member. I'm going to say it's in Virginia.
Ignore me.
All right, we're starting a new business. Now this is, you see, and these bullets are good too. There was one question I think you said, someone asked about changing the type of organization. This is only selected if you're, such as changing from a sole proprietorship to a partnership, changing from a partnership to a corporation, etc. This is where you would do if you wanted to convert.
Okay.
Generally, from a sole proprietorship to a partnership is allowed, but you find yourself, they may not send it to you. You won't get that automatic, like you can do it online, like we're going to create one, but it's not going to give you the certificate. But in this case, for all intentional purposes, we're starting a new business. And I'll put my information.
Oh, I think I can do this one too. If you have more than one business, do you get an EIN for each business? I think it's yes. What do you think? Okay, good. Cool. Yeah. Someone told me to, at one of our conferences, she said that she started a business. So say she had a bakery and she had an EIN attached to it. She shut the bakery down and then she started a notary business. Can she keep the same EIN from the bakery and use it for the notary business?
A lot of people do, but if you remember when we're going through this section, what we're going through now, when you're creating that EIN, you're designating what kind of business that is.
That's true.
So for all clarity's sake, I would create a new EIN number just because that's a different type of structure.
Gotcha. Cool. Oh, there's another quick one. I don't know this one. I'm trying to think. Oh, I think I know. The difference between an EIN and a TIN is the EIN is an employer identification number and a TIN is a taxpayer ID number.
Now, and the thing is, oddly enough, they're interchanged so much because the EIN number and the tax ID number, they are one and the same. It's just the identity is different.
The taxpayer is not your social?
No.
Oh.
And see, the thing is, that's why it's interchangeable. Because the TIN / social security number, they did it that way so that you will try to not make it look like it's your social security number. But for all intentional purposes, once you get the EIN number, that would also be your tax ID number.
So okay. Where do you, if you didn't get an EIN, where do you get a TIN from?
It's the same, and that's the thing. There's nowhere that you apply for a tax ID number. It's the same process.
Oh.
So they use them a lot of times. The TIN came in to kind of replace the SSN, because the SSN,
Gotcha.
That's your only tie to you when you were born.
So essentially, if you see TIN, you would either put your EIN or your social.
Absolutely.
So it's the kind of number.
Right.
Who's paying taxes, an employer or
Right.
an individual?
Absolutely.
Ah, look at that.
Right.
Learning some awesome stuff.
And then there's another number called an ITIN, an ITIN.
I have seen that.
Right.
What's
And
that?
that's for people who were not born here and had to register for an ID number. And that instead of them calling it an EIN or a tax ID, it's this number.
So if you're not born here, like my mom's not born here, I just put you out there on blast. If you're not born here, your ITIN number, is that your social security number they issue to you?
Yes.
But it's different because you're not born here?
It's called the identity. It's treated as your social security number. Now there are people who weren't born here that eventually, once you're a resident, you can apply for the social security number.
Oh.
And then you have the then you have a social security number. But this is the ITIN number. It's issued by the U.S. Internal Revenue Service to individuals who required for U.S. federal tax purposes to have a U.S. tax ID number, but who do not have or not eligible to get a social security number.
Oh, so like if you were from another country and you move here,
Right.
you would apply for this.
And in the process, you can also be applying for the actual social security number. But that's what this is.
So when you apply for this, you also have to apply for a social. It's two different applications.
No, some students that live abroad, that were born citizens of another country, but coming to school here and have visas, they need an ITIN number in case they get a job or something like that. But they don't ever have to really apply for a social unless they're becoming residents of the country.
Moving on. So after we do all that and we're making money and we're paying expenses, how do you recommend we keep track of our income and expenses?
Primarily the best thing anyone can do starting out is be vigilant with their bank account.
Okay.
The bank account saves you money from coming to someone like me to do accounting from the very beginning. If you're utilizing, when you receive revenue, put it into that account that you establish and use that account, that debit card or that check.
Yeah.
I'm telling on my age. A lot of people don't even use checks anymore.
Yeah.
But if you use that account that way, at the end of every month, you have your bank statements. And your bank statements will be, most banks give you a little grid a pie chart at the end, or at least an idea. You see what kind of deposits, what amount of deposits have gone in, the expenses that have gone out. What that does initially, you can get a couple of highlighters and highlight the meals or look at what you're spending.
Yeah.
Now that's the best record keeping from the very beginning.
Is a business checking account?
Yes.
So just to give more clarity on that. So when you get set up, people ask all the time, do I use my personal checking or a business checking? If you're going to LLC, you have to get a business checking anyway. Most of the time they're free, or you put like $100 in it to get it started. The business checking account, what I was going to say, I had something I wanted to tell you about the business checking. Oh, when you open the business checking account, what you want to do is all the income that you get. So you're going to get checks, you're going to get direct deposits from your signing companies. If you get cash, deposit it in there. And then anytime you have an expense, use that card.
Right.
That way you don't have to keep receipts. Because I know everyone's like, I know my mom, she has bags full of receipts. And is that annoying?
That's how we learned.
Okay.
Years ago, we learned you keep your receipts, keep your receipts, keep your receipts. But if you're ever questioned by the IRS or you get one of those nasty letters, the first thing they ask for is the bank statements.
The bank statement.
Yep.
So use your card for everything. So everything, gas, the printer, this class, any training, memberships. Oh, we're going to go over deductions in a second too. Anything that you need to pay anything for your business, use the card. That way you don't have to keep receipts because it's going to automatically put it on your bank statement. And so your bank statement is going to show you all of your income and all of your expenses. And then when you file your taxes, it's already there. You don't have to go through receipts and say, okay, that's
Absolutely.